Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 1st, 2008. Today, April Fool's Day, guys, and there's no April Fools here. I hate to break it to y'all, but the markets sure did go up about 3 to 4% all across the board in a monstrous rally of huge proportions, close to the largest of the year, if not the largest of the year, as the indexes soared. The Dow was up 391 points, or 3.19%. The Nasdaq up 83.5 points, or 3.67%. And the S&P 500 up 47.5 points, or 3.59%. And, you know, we talk about this, and those of you that have been following our videos know we basically continue to call every move in this market. And sure enough, another move called almost to a T. I mean, we couldn't get any closer. We've been talking about the consolidation, the beautiful spring action in this market as the spring was getting coiled harder and harder as each day we pulled back and consolidated on light volume, only to roar up huge here on today. And let's just look at the charts. We might as well get right into it, and we'll talk about it as we go. First of all, let's start with the intraday. And those of you that know chart patterns know that this was just a bull rally. They never let the shorts out of this market. You basically could have gone long at the opening bell at 9:30 in the morning and just held all day. You would have made a ton of money. There were virtually no pullbacks. And when we talk about short squeezes, this is the key, guys, is that when you know you're in a short squeeze when the market never gets much of a pullback. A pullback is virtually a point on the S&P futures here on the intraday 10-minute, and that's what we use. And you see this massive rally starting really from yesterday, but nonetheless moving up like this. And this is the pullback. That's all you get. That's maybe a point down on the S&P. That's not enough to let any shorts out. Then you get another push, another tiny pullback, another push, a tiny little pullback where we finally touch the 20 moving average. And look at how long it was since we touched the 20. From this point to now to this point. That's a huge amount of time for a 10-minute chart to go away from that 20 moving average. And sure enough, it just yielded more buying, a one candle pullback, another buy pressure, buy, and the market basically ending right at the highs of the day. A beautiful chart there. There's not a lot to say here. We didn't have a lot of patterns. There's no head and shoulders here. There's no breakout, gap out, this, that. Virtually, you just had a buy market all day. The buying pressure was out there. It never let down. You had the shorts getting squeezed all day, and you guys know we follow sentiment, and just we noticed, my partners and I, we were watching, whether it's the media on TV or individuals out there that happen to be, out there talking about bearishness, but there was a lot of it out there, and the chart setup was such a beautiful, I couldn't dance around more and scream to the chat room or to the outlying viewers or consulting players about how beautiful the setup was. And we're going to look at the daily chart because this is really where it comes to fruition and how beautiful it really is. We talked about this massive little bit of a W pattern formation with the tail right down here, and let's draw that in again for everyone to see. There you go, little tail down there. Then you had the blast off, which was a monumental squeeze all the way to the 50. You had a beautiful consolidation of basically 4 to 5 days consolidating where the markets, again, we talked about angles, and you draw the right angles in here on the moves, and you can just tell the variance in the angles here. You had a very big angle here, a much smaller angle on the pullback, a gentle little move down, and sure enough, the blast off today. And look at that. It came right in perfectly to the 20 moving average, which is the yellow line here on the daily chart on the ES futures, and then look at the blast off. And not only that, but you actually closed above the high from the previous move, which is bullish as well. Now, many people are going to say, well, does this mean we're going to continue to rally? Well, we do have an upside bias. You guys know we called this rally almost to a T. We actually talked about it setting up beautifully yesterday, how we were sitting on this 20 moving average and probably going to explode either Tuesday or Wednesday. It turned out to be Tuesday, and we were ready for it. This is what we've been telling our subscribers for the last week, to watch for this consolidation and the blast off. And sure enough, as we got into Monday, we expected that consolidation early in the day on Monday and a blast off, and there it was. So again, you look at it and marvel. These charts don't lie, guys. Companies, we've heard companies lie, whether it's Enron or WorldCom or all these other companies out there, or lately Bear Stearns, when they said everything was okay before they got it bought out for $2 a share and then adjusted to 10. But the charts will not, and that's the beauty of it. You have a chart, it tells you a pattern. The patterns are almost, they're more accurate than any word of any company out there. Fundamentals to me don't mean anything, and to us at In The Money don't mean anything, because fundamentals are what the company's stating. Yeah, well, that was great when Enron said they were making tons of money and everything was fine, but they were lying to us. So again, you can really tell them from the technicals. And again, we focus in on pattern, price, and time. That's it. We'll look at technicals as we go. Obviously, we analyze divergences on stochastics, MACD, RSI, all that stuff. But the majority of the analysis is done on our proprietary analysis techniques, our mathematical calculations, and these chart patterns, price, and time. So again, let's take a look at the Nasdaq, which was up 83 points, and the same chart pattern applies. You have the beautiful W pattern right here, and you have the move up, then off of that W pattern, the V, and the blast off. And look at how beautiful. I mean, you wonder about these charts at how amazing the chart patterns are as they just come down to settle on the 20 moving average and then blast off. It's almost a rarity you get this much of a set off, because they usually try to shake people a little more. A lot of times they pierce the 20, make people think it's going lower. But this much bearish sentiment on the financials has really taken over the market and the sentiment, and they had to, the shorts just got squeezed. That's all there is to it. So a beautiful move there, guys, without a doubt, and we'll continue to focus in on these charts as we go. Let's take a look at the SPY, and then we're going to get into where we're seeing the market going. Same thing applies on the SPY. This mirrors the S&P. A nice little W pattern there, blast off, pull back to the 20, and off to the races we go. Now, many people are going to say, well, where do we go from here? Do we continue to rally tomorrow? Do we continue to rally on Thursday and Friday? And, it's possible, but remember what we always talk about. We always say you have a huge move in the markets, and then there's often a tendency to pause or consolidate for a day before another push. So while we do see more upside in this market, probably about till mid-April, give or take a few days around that mid-April day, whether it's April 10th, April 15th, right around there, should we continue to move up into that, then we'll start to change our bias. And as traders, that's the way we are. You guys know how we are at this point. Those of you that follow the videos, we're chameleons. We see the market ready to rally, we jump long. We see the market ready to fall, it's giving us the signals, we'll jump short. We want to make money on every major move or every micro move, which is a couple-day move in the markets, if we can. All right? And that's what you guys see us doing here in these videos and how we call these moves. Now look at the volume again, guys. Look at the increase in volume today. All right? The biggest volume bar since the consolidation started, all the way back here. And that's just something I want to point out as well, because we talked yesterday about how the light volume was such a key indicator in telling us that this was just consolidation here and nothing more. And then the bigger volume steps up. You had over 2 million contracts on the ES today traded, quite a bit more, about 2.3 to 2.4 million contracts, while yesterday we only did 1.5, and the day on Friday we only did 1.5, so that was a key indicator. So now, again, what you have to assume here is that there may be a little more upside tomorrow. Yeah, we could push up a little more tomorrow. You could even pull back a little bit. You could kind of have a flattish day, but ultimately you have to assume that you have a pause day, and what we like to call is an IMS, an in-the-money-stocks.com formation now of a possible pause, and we'll get into that more in tomorrow's video about what that play is. We don't like to go into it too much, but those of you that are very interested, definitely sign up for the private consulting, the institutional consulting, those of you that are out there and have contacted us about the institutional consulting services that we provide and help you with your market guidance. All right. Those of you that are out there, also think about joining the Swing Trade Alerts and the Intraday E-mini/stock chat. We basically told everyone in the chat this was happening. We even guided them, to be ready for this move. It was no secret. You guys know we didn't keep it a secret. We played it. Some in the chat definitely played this move, and that's the way we are. We want everyone to take advantage. We're here to support the little guy, the institutions in most places, the guys that hype these things. We're here to help out everyone understand the games and the charts so they don't get taken off guard by upgrades and downgrades of stocks and understand really what's going on behind the scenes there. So in any case, that's really it for today. I mean, we can touch on some stocks and since we have a minute left here, and we can look at Google. Huge move in Google today, up 25 points. That's the daily chart on Google. And you can just see off to the races, just like the market here on Google, up 25 points. Baidu, B-I-D-U, was up even more, up 34 points almost today. Apple up 6, back to 150. Apple was $115 not long ago. We can even look at that chart and look right down here. This is right where it was. Yeah, that's Baidu's chart. Let me get Apple's up. Right down here. Nice bottom formation. Look at that bottom. All right, you had a point here, a test of that, and multiple tests of that. It could never break lower. then all of a sudden off to the races. Watch this, because this is key. I'm just seeing this on Apple's chart. You're going to come into resistance here. This is the first hit in quite a while of the 200 daily moving average. You guys know how we believe. We believe first hit of the moving averages is usually a pullback, especially the 200. The 200 is the most powerful out there. So keep watching that. You may see maybe a push into that a little more tomorrow, and then a retrace back down just a little bit. But you're going to watch for some resistance right around there. And as I always say, these are just our common, this is just our personal analysis. We have no credibility really out there. We have no, designation. So just keep that in mind, guys. Always consult your financial advisor before making any decisions that you should invest or do this or that. We just talk about this as a courtesy out there, and really, it's nothing more than just a video for entertainment purposes. Okay, guys, Amazon up 540. Goldman Sachs had a huge day, up 11.5. And really everything got started this morning because of the financials. Financials really got things on the roll, Lehman and UBS. All right, have a wonderful day. Thanks for watching these videos. We really, truly appreciate it. And we'll be back tomorrow with another one with more analysis.